So guys, let's move to our stock of the week. Our stock of the week this week is TPS East Africa. That is the what is it called? Tourism promotion.
But yeah, just quickly back to Safaricom Sacco. For guys maybe who would be considering investing in Safaricom Sacco or getting there, I think they gave returns of 8% on deposits and then 13% on shares. Yeah.
Dividends.
Yeah, which is good, eh?
13 is great.
13 for dividends, although compared to other SACCOs, there's some SACCOs.
There are guys who do 20.
Yeah. So
Kina Stima Sacco, they do 20. Kina Kenya Police.
On dividends. On shares.
Anyway,
so that's just fun. Out of this whole
on savings,
dividend on
shares, on dividends.
The shares of both the equity.
Then the interest on deposits.
The income you get from savings is interest.
This man took a look. This guy and next week, dance next week you're bringing questions. There's a high probability that he might lose.
Are you sure?
Anyway,
where was I headed? Oh, so you talked about 20%. That's on the dividends, right? And what numbers are we looking at on the savings? Interest on savings?
Probably
they play between that 8 and 12.
Yeah.
For a number of SACCOs.
Yeah, 10, 9 is popular.
Anyway, that was...
Yeah, you've given us a detour again.
Information on...
So right now, there's no going back on SACCOs.
No, we are not.
Or you want to add anything on SACCOs?
We are good.
Okay. Guys, you couldn't even get 3 out of 5. So...
Inafeel kama math contest. Ukipata 2, as in...
shine. You have an entry. Okay, so as I said earlier, our stock of the week is TPS East Africa. That is the tourism promotion services. And TPS is under the banner of the Aga Khan businesses umbrella. And we've had NMG, Nation Media Stock of the Week, which is also under the Aga Khan umbrella. We've had DTB, Diamond Trust Bank, as our Stock of the Week, which is also under the Aga Khan umbrella. We've had Jubilee Holdings as our Stock of the Week, which is also under the umbrella. And now we are having TPS East Africa. So TPS East Africa are the owners of the Serena brand. Serena is quite popular. I think overall they are in 10 countries, but in East Africa they are in Kenya, Uganda, Tanzania, Mozambique, Rwanda, and of course the DRC. Yeah, so that's where they operate. I think they have around 15 lodges, hotels, resorts, and camps in East Africa. The most popular, of course, being Nairobi Serena here in Kenya. Many people are familiar with that. Now, guys, if you look at just to mention the performance of the stock, on Friday 18th, it closed at 12.2 Kenya shillings, which is actually its 52-year low. Yeah, it's at a 52-year high of 18 Kenya shillings. So, I mean, interesting developments. Today we are in the hospitality industry. Yes. And just to kickstart the conversation, if we take a stab at their H1 results for 2021, you find that they did a LAT, loss after tax, of 557 million Kenya shillings. And this is coming, if you compare with H1 of 2020, they did a loss after tax of 641 million. So it's a bit of an improvement, but still on the red end. And if you look at the full annual results of 2020, as at December 2020, you find that there was a saddening loss of 1.2 billion Kenya shillings. But then this is really understandable because of COVID. Yes, you find that their revenue really was slashed for 2020 by 70%. And when COVID got into the country, this is for the Kenyan case, in March 13th, a little over a week later, they closed then up to June 2020. That's when they opened. And now you can see,
I think the revenue hit was bigger.
Yeah, I think it was 70%.
Bigger than 70, because they were at 6 billion reveons in 2019.
Yeah, then they came
down to 2 billion.
To around 2 billion.
Yeah.
Oh, yeah, it is.
It's like a
it
third.
actually is. No, it's 300%.
100%.
A third of what they...
Oh yeah, it's a third of what they.
Yeah, bruh.
Okay.
Yeah, it is a third. Oh, this mathematics is disturbing us today. So
Today, it's been like this for a while.
okay, guys, just ignore this man here today. Anajaribu kutusumbua just because as when we'll be closing the podcast, we'll of course remind them of the scores of today's market map trivia
In case someone
case-
forgot.
Enjoy
case
your
someone
time.
forgot.
Enjoy your glory.
So guys, just to look at how COVID has affected them, as you've seen, the revenues were really slashed, and they closed for a couple of months, from March to June. So that was expected. And they are not the unique case. Many guys, the hospitality industry,
Yeah.
as well as the aviation, were one of the most
Transport,
hit
yeah.
sectors and subsectors in the whole economy. So now, just looking at how they are performing, and for me, I'd want to segment. So just before I start segmenting, an interesting development is that in DRC, they opened a Serena in Goma. So they were there before Equity Bank.
Now he knows where he's going to spend.
Yeah, so they did this in September of 2020, and it was sort of like an unexpected move because they had only, they had closed, and they didn't have a lot of cash, because revenues had been hit and all that. But then they went ahead and opened Goma, Serena in Goma,
But
which is now
your
very well
statement was right
positioned
the first time. Yeah,
do you
the
mean?
revenue is reduced by
by 70%.
yes, it's around 60 something.
So you were just confusing me.
Anyway, carry on. Around 67%.
Yeah, because it was 6 billion to
Yeah.
yeah. So now just
they
going
lost
back to
any-
the issue
yeah,
of
Goma.
them opening in Goma, for me, I think it's a good outlook. I'm
You've
sure
been you've been doing that math all the time.
It bothered me.
Okay.
It was a story of English and combination of both. Anyway, carry on.
I think I should add more questions to to the trivia, mathematical questions for that matter.
Yes, mental math.
Yeah. So of course it's well positioned in Goma now. Guys are moving there. I'm sure when the trade tour happened, courtesy of the trade mission, courtesy of Equity Bank, there are guys who spent their time in Serena. Those are good. But just segmenting now how their market and how the whole system is. I'm looking at hotels. Okay, so they have out of the 15, the 15 is composed of resorts, lodges, camps, and now hotels. Now, if I look at the pocket of hotels, I'm looking
Pocket
at
word, you're really using it. You like it?
okay, mfuko. yeah, so that you're happy.
Kiondo.
So if I look at hotels, so how these hotels have been making money previously has been through conferences and events.
Especially the city-based hotel, so like
Yeah.
Nairobi, the Nairobi Serena, for instance.
Yeah, so you find like the UN UNEP is based in Nairobi. So when there are these events, NGOs, even government events, so they're being held there. So currently, it's not very exciting as it was, because of many people moving into hybrid. Now you can have virtual and also physical, but then most of them are still virtual. I'd say that 50% of the events that were being held are still in virtual. So that is still quite not very exciting, but we hope for growth for them on that sector. Also on the hotel bit, I'm looking at.
Sorry, let me interrupt you. Why do you see things change from that angle?
Okay. See, now look at it this way, Easter. Last year, we had the Delta variant, which really brought people back, to even guys who are working at who had started moving into the offices, days were cut or some were told, just go back remote. Then a couple of months after, Omicron came, and Omicron was bad. People moved back to remote, fully remote. Others, their days were cut. And now you find that events that were happening, most of them that were to be made hybrid because of those variants, now we're like, oh, no. Just take them back to virtual as they have been through 2020 and the part of 2021. So now, based on those two variants that I saw last year, if we are still not yet out of the woods. So if another variant comes up, that leads to cancellation of events, to going back to virtual and all that. So for me, my thinking is based on that. About the conferences and events.
Okay.
Yeah.
So it's not about to change.
It's not about
to change.
Yeah, it's really not about to change. It's not looking very exciting because just from my circles and chatting people, many are not that open to going back to issue of having physical conferences and all that, because throughout being in remote roles, people have come to understand that there's a lot of convenience in remote roles. Always
Someone
working
here
in your
won't agree.
PJs.
Someone here, he won't agree.
Why?
You guys they were supposed to have an end year party.
Anyway.
You guys had an end of year party on Zoom.
So another like pocket for hotels. This is particularly for hotels. Is the issue of parties, and weddings where you throw a party for a friend or birthday or something in a hotel. But then you find that the current developments in the recent years, this is not very active because of the emergence of of gardens that you could rent. There's some nice ones on Kiambu Road where if you're having a small party, whether it's graduation party or what, you'd go and do the party there instead of and they're actually cheaper than doing it in throwing parties in hotels. So that's becoming a bit outdated, and that's affecting the whole ecosystem, not just Serena. I'm also looking at gala events, and for gala events, gala dinners and all that, this is still a good pocket for them because you find that the tradition of gala dinners is in hotels. If you're not throwing it in a hotel, man, it's not a gala dinner. So that for them still is a good pocket of growth. Another area that, and just to finalize on the hotel bit, and perhaps where they can make good money this year, is politicians, throwing press conferences. So this year
the fundraising lunches,
that looks exciting for
meetings,
them. Exactly.
Okay.
Yeah. So for hotels, I'm looking at press conferences by politicians. As they move from one faction to another, transfer window. Good. I think it's a good outlook for them on that side.
Yeah, but I think still it's bigger for the corporate. The corporate scene has been what has been sustaining market, and I think companies or hotels are going to be still lobbying guys to at least have, even if you're working from home, like they'll be trying to push guys physical interaction, every once in a while.
For mental health.
Just in general camaraderie in the office, that kind of thing. I think that space, it's going to take a while to pick up. I think eventually it will get back to that, because I think there are guys whose careers are just organizing conferences, organizing
event coordinators.
Like I think there's quite a bit that is going to come back to that. Of course, we know the government is going to go back to, like, for them, per diem is a big deal, so they'll always want to have an off-site meeting at a particular hotel. Normally it's Naivasha or the coast, but I think it's a space that it will get back. It will take a while, but now my concern, especially with the operation aspect, is you find TPS Serena, for instance, it's TPS Eastern Africa. For them, they took a loan this in the financial year, and financial year ended 2020. And now, because
don't tell me it's in a foreign currency.
They have a mix
because the way the shilling is going, man.
They have a mix of it, but the point is, because this loan was taken mostly like to keep afloat at the time of COVID, you find that whatever.
Really? When did they take the loan?
They got it from ABSA.
Yeah, it was in the year of 2020.
Yeah, so I'm just wondering why would I take a loan to sustain my operations, but at the same time I'm expanding into other markets.
What do you mean?
What do you mean? They got into Goma around the same time COVID was kicking in.
Yeah, but people borrow to expand.
Yeah, all the time.
Yeah.
To expand, I'm talking about borrowing to remain afloat, to stay afloat.
Yeah. I mean,
If you're not sure of staying afloat to the point that you have to borrow to stay afloat, why are you expanding at that time?
See, that's how you create
it's
new
a good
markets.
opportunity, because there's an opportunity there, and it's actually what that opportunity might actually unlock success for you, that opportunity might be able to cater for the whole loan, or that has been even helping you doing this. Because look at it this way, Easter. If you look at TPS and how they've been performing, it's been like a roller coaster. So you find like in 2016 they do, things are not very good, making a loss. 2017 there's a profit. So it's always been a roller coaster. 2014 things are good, things are not bad the following year, things are bad the following year. So it's always been a roller coaster. But of course Mr. Dividend will tell us that they've been trying, they've been showing effort when it comes to dividends. We'll get to that. But then if you look at that roller coaster,
that was in 2018.
2019.
Yeah.
They didn't
So
usually
Easter,
do
if you look at that roller coaster, you find that there's not a lot of cash sitting in at the end of the day.
Yeah.
Okay, because you have been on a roller coaster. You haven't been like on an upward trajectory of just making profits and profits and profits. So you find that when COVID hit and you've closed, there's no revenue coming in, and there are still fixed costs that you must adhere to. That you must adhere to, as I've said. Now, at that point, you're cash strapped.
Yes.
You need a player to give you money to sort that out.
Yes.
Definitely.
Exactly. All that was I feel like it's in support of my argument. You've gotten to that point, you have fixed costs, you have everything, you've closed, there are no revenues streaming in as much as before, at least. Now this is the time you want to expand.
Remember, they're not expanding. Remember, where are they expanding?
Into?
This is a
virgin market. I totally get that.
Exactly.
But the thing is, unless you tell me that at
and
the time Corona
were restrictions in DRC the same as in Kenya, that you have to close your restaurant by 7 p.m.
No, come on, you cannot compare them. You can't use that comparison. If the Kenyan market was hit, how vastly hit was the DRC market?
If you have any challenges in, bro, you have to look at this thing this way.
Plus, this is not a kibanda. This is a niche market.
Exactly.
It's a niche market.
Relax. And you know what? These are people who are running a multinational, Easter. Okay? They're running a multinational in different countries, different markets, different things, different regulations, different governments. And you have to look at it this way. You can't say that when you're facing challenges in one side, in one country, is that you should not expand at
Which
all.
is why, Keegan, we are not looking
Does
at
that make sense?
Okay,
it makes sense, but we are not looking at
That if you have a challenge in one market, you should never expand anywhere else.
The consolidated financial it's a vision of everything. How the financial
calm down. Let me give a clarification that will change the.
If they had started this acquisition before,
just calm down.
Okay.
So the thing is, the opening of this the Goma Serena Hotel.
Yeah.
It's under a management agreement.
Yeah.
So it's not. So how management agreements work is there's another developer who incurs the capital expenditure to develop the hotel.
Yeah.
And then they go look for a brand that is known. So your Serenas, your Sarovas, your 4 Point, Sheraton, who, and then get someone on board to come in.
It's like a franchise.
Yeah.
So TPS owns like 20%.
So they do get a share of the revenue according as per the management agreement.
Yeah.
So in that case, it's not a huge outlay of capital for expansion.
Do they get to make a capital investment now that the other partner? Because all they're providing is the brand, right? The management, the brand name and management.
Right? Yes.
So, to the best of my knowledge, that does not require a lot of capital.
Yeah, that's my point.
Right?
Exactly.
So who said that this guy is borrowed to expand?
So we've clarified.
No.
We've clarified.
No.
It was
But
not
anyway,
to expand.
it was one of you guys.
May I said to stay afloat.
Someone here mentioned that they borrowed to get. And that was the point I was trying to argue.
Yes, we get your point. So that's what I'm saying. It's a management agreement. They do not build the hotel in Goma. They do not own the hotel in Goma.
Yeah. Even in Mozambique.
We'll need to check, but probably. So it's the same agreement as Radisson at Radisson Blue.
Yeah.
So the Radisson do not own the hotel there.
Yeah.
They just have a management agreement
Yeah.
there, I believe. In
Okay.
case I'm wrong, please. But that's what I think.
Yeah. Okay.
So that's the whole point.
Tuambie hapo chini kwa comments.
That's the whole point of this. Yeah, so back to my earlier point.
No, I want you guys to agree with me on the point that
Done.
you cannot be borrowing. On one side, you're borrowing to stay afloat. Then on the other hand, you're borrowing to expand.
No, but if the
I
opportunity
honestly
is
don't
good,
agree with that.
even me, I don't
Bro,
agree with that.
multinationals think differently. They do think differently, a lot differently from the way you think.
It's called pivoting.
There's a
If-
difference
if
between
there's-
thinking differently and thinking rationally.
It's called pivoting.
Uh-huh.
It's the same way companies are able to adapt from if an existing business is not working out well, and they do decide to take on let's say debt to venture into another space that works pretty well. And when we were talking about, who was it, Car in General, how they had to pivot over the years from just selling tires.
Yeah.
And if the tire selling business is not doing well at that time, and there's an
So they were
opportunity
even
about
selling
that.
cars.
Okay.
They were
Yeah,
even
then-
selling cars.
yes.
They left. Let me give you a good
and
example.
put more investment into the 2-wheeler and 3-wheelers.
Actually, I agree.
So-
Just
yes.
imagine this. Vodacom made an entry into Ethiopia. Okay. Vodacom is in different countries, South Africa, Kenya. So if Vodacom was facing a challenge with their business in South Africa, that now they should not make an entry in Ethiopia. Doesn't make sense.
Yeah, it's all about the opportunity, taking a calculated risk, whether it will pay off or not. And then hindsight being 2020, will be like, yo, it was dumb to do that. Or, yeah, it was exactly what we needed
was
to
genius.
do. Yeah, genius move. So that's the thing. But back to my point on the debt situation, because that is what brought on this whole this whole furor. How it's usually spelled
Fury.
Not fury. There's FURORE.
That one.
Anyway, back to their situation. So even if you have to look at their half year results, you find that their current liabilities are more than their current assets, which places pressure on short term.
So there's a liquidity risk there.
Yeah.
And when a lender sees that, they're gonna charge a premium.
Yeah, that usually tends to happen.
Because when it comes to, if you default, like I don't have something that I'll come and auction out to.
Aye, these people have 13 billion in assets.
No. Dan, what have you said? Liabilities are more
Short
than?
term, the current assets and current liabilities, which places pressure on now their short term.
Yeah, but if I'm a lender, I'm still gonna charge a premium.
So it means you need to restructure.
There's a
to
lot
get,
of things you look at, Keegan.
to get you
The
need,
liquidity risk, but also you look at asset to liability ratios. There's a lot.
Yeah, the camels and all that. Yeah.
Camels? No, I
like
I
that's an
genuinely don't
acronym.
know.
Yeah, it's an acronym.
Okay.
Yeah, the capital stock,
You
all
let me
those
know.
things.
You teach me more about that.
No problem, sir. Dan, what do you guys think about their safari lodges? Okay, because the safari lodges is another side. We've talked about hotels. Now, if you look at the whole tourism space, you find that of late, it's the local tourists, Kenyans, who've actually been keeping the industry alive. Because since the emergence of COVID, tourists from all over the world haven't been able to come to Kenya, at least in the numbers that they were before. And now I'm looking at it this way. So if you look at the Serena brands, compared to other players in the market, like can Kenyans easily or comfortably pay the rates that Serena charges? Because now it's the local tourism who are having a say in the market.
And there's
So
the
for
Airbnb.
me, I'm thinking I'm looking at that, and I'm probably it reduces my excitement on that. And then probably the emergence of if a variant just emerges in one part of the world, it most certainly it will get to all the other parts. So a new variant means cancellations for people who are coming in and all that, and people not really wanting to travel to come for safaris. But one interesting thing that I like mentioning is the way there is a Serena at Mara and there is a Serena at Serengeti. So wherever you go, if you cross here, you're just going to go to the other part. But I think another area that could really be an exciting place for Serena and actually the whole tourism sector are global events. So this week we've been having the East African Classic Safari Rally. In June, July, we'll be having, of course, the World Safari Rally, which we had last year after so many years. So WRC, right now, so there was a story that was published, I think, a fortnight ago on Business Daily on how hotels have already been booked. Like right now, if you go and ask for like a place in around Naivasha for July around that time, fully booked because of WLC. And you find that Sarova, they have Serena. Serena, they have the Elementaita Lodge, which is close to Naivasha. So I'm sure that will definitely perform well in that Q2, Q3, because of the global events. So these are things that, in my opinion, are really the huge, like they are deciders, they're huge deciding factors when it comes to the revenue pockets for the hotels, certainly.
I'm actually going to count the number of times you've said pockets. Beside that, okay. I feel like the rates, what do you call it, vaccination rates in Kenya, it's really affecting this industry, right?
Okay.
In the sense that it's not just you've mentioned about local tourism being the supporting agent, or
absolutely,
pillar for this agent as we speak.
Yeah.
But then, do you realize that when a tourist is thinking of coming to the country, they look at the vaccination rates here, and it's as low as less than 5%. They're not going to come.
Yeah, that would certainly be.
And the red
an
zoning
issue.
and the yellow zoning and
because I remember. I think, is it at the start of the year or the close of last year, when the Ministry of Health announced that having the certificate, the vaccination certificate, will be a requirement to access I was supposed to the hub malls in general, and supermarkets and hotels and restaurants. So Sarova, actually one of the people who, sorry, not Sarova, Serena. The people, the names are quite similar. Actually came out and said that we are to come to our facilities, you should come with a vaccination certificate. But then I think they did away with it, because they realized
they had to, because how many
so for me
that
actually proves your point that people from the outside, so for them they are looking at, so our foreign visitors, they'd care more about the fact that for people who are accessing here, they must be vaccinated.
But
and the fact that the biggest market, or the ones who are supporting these industries, Kina Serena, the hospitality industry, is local tourism. I'm not saying Serena, by the way, because if I look at hotels or camps, I'd rather, and you talked about cost, Airbnb is way cheaper than Serena.
But you can do an Airbnb in the Mara.
Sorry?
Yeah, that's the point.
So
or in Kilaguni,
like those places. So that's why, for me, I feel like for their lodges, and especially these that are in the national parks, the Masai Mara one, the Serengeti ones, those ones, I think they will bounce back, I think, quicker than, in my opinion, the hotels, the traditional hotels, because
the competition.
Even in December, they could have had a pretty good year had Omicron not happened. But even going forward, looking at it from the coronavirus perspective, Omicron seems to have really tamed the impact of COVID. Because it seems to have gotten everyone, and right now it's not, even talking about the Kenyan perspective, it's not, COVID doesn't seem to be such a bother now than as compared to earlier. Like, guys got it I think most guys got the
like a cold,
Omicron virus in December at that point. So come the summer period between May and September thereabout, I do think there will be many people who will be coming, especially from the usual tourism market, your UK, your US, European, US market, who are going to come and they'll be going back to the Mara. So for the lodges, I feel like that will bounce back quicker. The hotels, as we've discussed, the whole conferencing part, it will come back eventually. It will take a while, but now they are challenging them in the short term, as you've seen their current liabilities being higher than their current assets. And even if you're to look at their reports from the financial reports from 2020, most of their obligations were coming due.
They're shorter.
Yeah, they were coming due in 20. Like it was a short-term facility for most of them. So even as per their half-year results, I haven't seen long-term liabilities or non-current liabilities. It's like everything is on current. Everything is current. So of course they need to be in discussions
and their cash flows prospects are not as good. So
so
unless they sell this, they find someone to buy this loan.
So because they have a good shareholder in the Aga Khan.
DTB can.
They can organize something.
Why is that? Why is DTB not their financial partner? Because they're so big on with ABSA and is it Church or Stanbic?
Probably they're just trying to.
Yeah, because if you look at their loans from their 2020 reports, in Kenya it was ABSA. They have an overdraft with ABSA.
Yeah, of how many billions? Is it 2 billion or 1 billion?
I think 2 or 1.2 around there.
Yeah, and then they were not that big actually.
Do you know what, Dan?
The Tanzanian institution is the one that has quite a big overdraft facilities. ABSA Bank Tanzania, there's a 1.7 million facility, 1.7 million USD facility. Although this is an overdraft facility, so they can always extend it by another year. They have a term loan of $4 million from ABSA Bank Tanzania as well. So they have a good relationship with ABSA.
Yes,
and DTB is in all those markets.
DTB is not featured here, but maybe because it's because they're taking an independent approach to
and we have this
assessing the opportunity.
We're talking about liberty.
Now let's hope that what is it called? Jubilee are the underwriters.
So that's the main challenge. By the time the conferencing
picks up
and goes back to the situation where it was, the sustainability of the company until that time, that's the challenge that they need to face, that they need to look at. Probably a shareholder loan could come through.
Yes.
Do you know what? Easter mentioned about cash flows. And now just to think of how TPS can raise money. Last year, during their 49th AGM, the shareholders passed that they should do a 200 million rights issue.
Yes.
And I haven't seen more developments out of that. I think that could probably come as a savior. And it's not the first time. They did one in 2010 for, I think, 1.2 billion Kenya shillings. So it won't be a first time for them to do it. We saw Crown Paint do it last year. We also had Crown Paint as our stock of the week. And it came in handy because that money that they used from the rights issue is what was used to offset debt in subsidiaries in Rwanda, in Uganda, in Tanzania. So probably
that's the option.
Maybe
the rights issue or the shareholder loan option too.
I'd prefer rights issue.
How much is the dividend? How much is the loan? Outstanding loan. Figures.
The figures. This is at 2020.
Yeah.
They had a borrowing of total borrowings of 5.7 B.
Way.
The 200 million can't do anything, but at least it can help.
But it helps with the short term.
Interest or what?
It helps
The
the short term.
yeah. So you don't close
obligation.
shop.
What bit of that is short term?
Is the wait for recovery.
5 point. What?
Yeah, that was their total borrowings.
That is not good, like at all. Oh, okay. The assets can cover that, but
Yeah, but
okay, because the retained earnings is actually 1 point something billion.
Dan, how do they do in when it comes to dividend? I'm seeing them like that company that they are really like siwachoyo. Like when they've made profit, they'll give whatever little they have.
sorry, I missed their current liabilities. As a
The 5 billion does not include the
no, this was in I'm just saying this was the total borrowings as at 2020.
Okay,
So looking at their half year results for 2021, their non-current liabilities has actually increased. It's now at 6.6 B. Those are their non-current.
Doesn't look so
And
good.
they want to raise
current.
200 million.
But then, do you know what? Me, I have faith simply because of the Aga Khan umbrella. Like, I'm sure the Aga Khan Development Network, like, they won't see this thing go down.
They
At
would,
least
but
I
is
think.
it sustainable? Does it? It means
Like,
then,
they have a big father.
it
Like,
means
they
then-
have a godfather.
No, it means it's just having the optimism that the markets are going to go back to how they
It's
used to be.
hugely dependent on that.
So it's just a
hugely.
matter of coming through and making sure that the short-term obligations, which is the bigger pain point at this point, are met.
Yeah.
And then try to restructure some of this, which is what they did, because they, especially in 2020, they negotiated with ABSA, Propaco, who also gave them a loan to kind of like postpone their interest payments and have them moved, deferred by a period. So once you just manage to restructure these things and weather the storm, most this year, I think from as we've met, the lodges would do well. Probably from next year, things will be picking back up in the conferencing space. So weather it for now, and then you'll things will
Dan,
go back.
am I allowed to give consumer feedback?
Give.
I think a couple of weeks ago, I was at
Why are you asking for permission?
Serena, Nairobi. You know, he's in charge of consumer feedback. You know, last week.
Oh, the letters.
No, no, come on. So, the thing
Cease and
is,
desist. You're the only one.
no, Easter has actually misunderstood. He has misunderstood the situation, just like he misunderstood the trivia. So,
Okay, you guys want to make
so
me
now,
understand.
I was in Serena, Nairobi, a couple of weeks ago, and I was really not impressed with the service.
My coffee.
For me, I felt like this is so. It was my second time in Serena, but the first time I was there for a conference. So this time I just went to have dinner, and I was like, like this is not the Serena. This is not the brand that's outside there. So like, you guys need to check on your services a bit.
Yeah, but that's an effect. It's a consequence or an effect of what has happened over COVID. They had to. So for most hotels, what they did, they had to let go of most of their staff, and especially the ones who are like on higher wages. So those are the ones who are like let go or told to stay at
To
home.
cut down the
And then
payroll.
you find that the people that they do have working now are more of the cheaper labor. So the younger guys who are just starting out in their careers who are cheaper. So those are the ones who usually run the hotels and the services.
So that affects the quality of things.
Yeah, it ends up affecting the quality of things. And then there's also, you cut down on budgets here and there. The number of staff who are available generally affects the quality at the end of it all. So that, as you mentioned, it's a challenge. But that, I don't know. I have a question. Should Serena consider putting their staff on Glovo and the food delivery? Should there be an option there? Or
No.
Do you know
I
what?
feel like
They
people go
wouldn't
to Serena
compete.
for exclusivity.
They wouldn't compete. They wouldn't compete because
What?
okay,
Glovo?
this
What?
this
Are their prices
this
that-
is my own
that
experience.
different from-
I had dinner at Serena, and it wasn't the best of dinners I've had. These places, big hotels, they actually sell the ambience and just cool place to sit and all that, have dinner, lit candles and all those things. But then when it comes to savory, like real tasty food, you can't beat restaurants. Actually, middle-sized restaurants, you can't beat them.
No, I think the competition is usually on price as well as quality, but price is the bigger
But
factor.
for me, actually, when it comes to taste, this small,
So they shouldn't go
restaurants
on-
in
they shouldn't-
Kileleshwa, where they have one of the best foods, man.
What does
compared
Java
to big
sell?
hotels?
What does Java sell, Keegan?
Java.
Yeah. No.
Java is okay. See, they sell food. What are you saying?
Okay, I expected.
in terms of ambience and
Yeah.
that whole
Yeah.
experience.
But they removed the sockets. They blocked them. I told you about that.
Yeah,
We observed it actually.
there's that-
But Java is a good brand and good food.
But
Yeah.
no, what do they sell? Are they in the business of? Do they sell food or do they sell the ambience of?
Okay, this is the thing.
What do you think?
I think that for a long period of time, Java were actually selling the ambience that you could wake up in the morning, not go to the office, get your laptop, go to a Java, and work from Java and eat at the same time. But then I'd say that is changing because of what was reported, I think, a fortnight ago, that Java have decided to block their sockets because they are looking the
was reported?
unit economics. Yeah.
They reported it?
Yeah. Unit economics wasn't making sense in terms of Dan comes with a laptop, plugs
On
in the
one
charger
coffee for-
on one coffee that costs 180 shillings for the whole day.
Anyway, I think when
Where I was headed with
Ju-
that is
any-
Java is, in my opinion, they sell the ambience, right? And the space and the experience of being there, which is quite similar to what Serena would be selling.
no, but Java now they're in the food space,
Exactly.
so I don't know
Exactly.
why.
So if they went on the Glovo's and all
Yeah,
that,
your food delivery apps.
Yeah.
Why? That's my thing, because
Yeah.
Java's
Also actually
foundation, I
consider.
think, at the time was create this fancy restaurant. Because when Java came in, it was considered fancy. Create that kind of experience, but at slightly more affordable prices than what you'd get at these two hotels. But now I think for these hotels, for them to remain competitive, it's I don't see the
Go
harm
for a
in-
low-hanging fruit.
Yeah, I don't see the harm in for them having a presence in this
Yeah.
apps and let customers.
plus they don't have to sell everything. They can
Yeah.
decide to just sell what do you call them? The confectionery.
It could be be the
Pastries.
kawaida.
Pastries, yeah.
Yeah,
You
like
don't have to
nothing.
do
It doesn't have to be 7-year-old ribs.
Because people will be buying.
What do you mean 7-year-old?
I don't know. Zinakuanga na hizi sijui ribs
Smoked.
sijui msee. Yeah, anyway, I think
Yeah, they could.
Because
They could
people
certainly
then
explore
would be
that.
buying Serena, not the food, right? So
Yeah.
if what I want is not the food, I just want that carrier bag and that shows that this is from Serena.
I just want, if the food is good, why
Yeah,
not
if
get
the
it?
food is good, yeah.
I'm talking about the market.
Yeah,
But then their pricing can't be what they do physically.
yeah, but also, how much was the dinner?
No, I can't say.
Why?
At the security,
National security.
Yeah.
Aye.
Money has been poured to
Anyway,
finish me.
because from
No, but it was around 15.
1,500.
Yeah, for 4 guys. 15k.
15.
for guys.
Oh,
Okay.
okay.
Nikula Vako.
15 for 4 guys.
Yeah, 15k for 4 guys.
Yeah.
Okay.
So it was a little over 5k each.
So it was like, yeah,
or slightly below 5k each.
40.
Yeah,
48,
48.
anyway.
Yeah.
Oh, that's expensive.
Yeah, that's
How many
that's-
courses were there?
It was a full course, blah, blah, blah.
Yeah, it was full course.
Okay. But because if you're to look at last time, for me, I've been at Serena once. I was at an internship. It was a meeting. Anyway, if you're to look at, yeah, if I remember the menu prices, the a la carte menu prices there,
Yeah.
I think meals were ranging from like 1,300 to 1,500 a plate.
A plate, yeah.
Excluding drinks.
Yeah.
And then there was of course, the usual sandwich, plates, whatever, which I don't know whether it was like 700, between 700 to 1,000. That was a while back. I don't know whether this is the same price, but if you compare those prices to probably like Java, it's not, if Java at cafe, the
Also
price
different.
differential is not that big.
Yeah.
So that if someone is able to order from Java and at cafe, because I think club sandwiches from those establishments that come with fries
Yeah.
play at around the same price, 700 bob.
To 800.
Yeah, they're about. And then some meals are like between 900 to like 1,200.
Yeah.
Yeah. So I think in that space, they could be able to. I agree. Okay, you just say we'll try to cut down our pricing to match what is there,
Yeah.
but then have the possibility of generating more volume.
And here's
To
how
offset the change in price.
they can actually cut the prices. So I was having a conversation with a gentleman this week, and for the longest time I've been asking myself, why is it that in these apps that where you can order food online, they are in a position where they can even give you a 50% offer, a 50% off, 40% off consecutively for like 4 months.
Yeah,
And
Bolt
they're
have been
still
having
giving you that.
40% off for.
And I realized that the reason why that can be done is simply because of unit economics. So if you were to go to, let's use Java, it's because you've used it already. If you are to go to Java and have double burgers, they sell it to you at around 1,100, inclusive of fries. But then if you're given 50%, that's like 500 and something. It's because they've calculated that the cost of you coming to occupy a space there, because at the end of the day, space is finite in their location.
Yeah.
They need you to get out of that chair as fast as possible so someone else can come in and the chain continues. But then if they can sell this unit to you, it means that they haven't factored in the price, the cost of you occupying the space
Yeah, yes.
for a particular period of time. So with them taking out that cost and taking out the cost of dishes, of cleaning the dishes, because they've just put it in packaging in boxes and send it to you. So there are some costs that are not inside the cost of
So the overhead costs.
Exactly. So that makes it cheaper than that.
Yeah.
So Serena can,
I'm just
based on that,
thinking-
they can cut the cost.
I have never seen an ad of Serena running an ad. I don't know. Like, there's this restaurant it's a hotel in Westlands.
Yeah.
It has green. It's very colorful on one side.
I think for me, I've
Building.
seen
What's the
Serena's in an airline. They do advertise in the international market.
I love that
Yeah.
because you talked about unit economics.
Yeah.
There's what you call customer acquisition cost, right? So if you're advertising on an airline,
Yeah.
you know that the customer acquisition cost is lower because you're going to get more conversions. Those are the people you're targeting, right? Now you come and advertise it where?
No, but if you're pivoting, it's
No, if you're getting on Glovo, now it makes sense.
yeah. So I think it's something that they could consider.
I really hate that.
And I don't think the barrier of entry for them there is high.
There's no barrier.
There's no.
The barrier of entry where?
Like
To the
it
food
to
delivery
now
apps.
the food delivery apps.
Is there
They're already
any-
in that space. So
there any
like they wouldn't sweat a lot to do that.
Yeah.
So they should probably do that. Guys, we've taken a lot of time today. So your recommendations as we close quickly.
For TPS,
TPS East Africa.
no, I think right now just wait for their current shareholders to sort out whatever it is that is going on.
Okay.
And then probably not a buy right now.
Easter.
Not interesting, man. Not a buy. Sell actually.
Yeah, but
You remember yesterday it closed, on Friday it closed at the 52-year low.
Yeah,
So-
and elections are coming.
52-week low.
Yeah.
Yeah.
52, yeah, and elections are coming, so chances of it going worse are high. So
Guys,
sell.
what I can tell you is that money, keep it in MMF.
Which one?
No, that's a conversation for another day. So guys, thank you so much for joining us on episode number 22. As we close, I just want to state the results for Market Map Trivia episode 22. So Daniel Kalia, 2 points.
Yes.
Easter Fanning, 1 point.
1 point.
I should have said last.
Alama ya bakshish.
Last and least is Easter with 1.
Guys,
So,
I have to cope with these guys. every
thank you so
single
much, guys. Like, subscribe, share.
I mean, it's a privilege.
Easter
It's an honor.
just unajuanga vile when students are not performing very well and you are asked to bring your parent, come with your parent and discuss future performance, why it's not going well.
So guys, thank you so much. We hope you've learned a thing or two, and until next time, remember, it's nothing personal, it's just business. Cheers.